afternoon. One thing back on unclaimed property that I found interesting when I started working with the division was that the state becomes the custodian of those funds that are sent to us, and we're responsible for them pretty much forever. So if you have someone that, you know, it's been 50 years since they've seen their money, please contact the unclaimed property unit and look for that money. It should be there waiting for them. There's no time period, no time limit to that is sheets to the state. It's not our money, it's yours. My unit in the distributions section, we're responsible for getting out sales tax distributions to you each month. We're responsible also annually for the prepaid wireless fees, the alternative ad valorem tax that just went into effect, and the forest land assistance grants that are sent out. If you have questions, please feel free to wave me down. I'd rather you get your question answered than forget it at the end of the presentation. So in sales tax, we distribute $4 billion annually. That's about $400 million a month to the local governments. That's a large part, I'm sure, of your funding in the county and in the cities. Annually, as I said, the prepaid wireless fees, we distribute approximately $15 million a year. $16 million in alternative ad valorem taxes, and forest land grants, approximately $30 million. My units function monthly. We're responsible for coordinating those sales tax proceeds, making sure they're getting down to you, and verifying the accuracy of those monthly distributions. Yes, sir.
I just wanted to ask, y'all have a program of information sharing where we would share our occupational tax businesses. Is that still intact where we could share this with?
That is, it's called the BOTS program. I can't remember what the acronym stands for, business occupation, but that is still in effect. And in fact, they're moving forward and trying to expand that a little bit more. I don't have a whole lot of information on it. I can tell you that my unit can provide you with a listing of businesses that are registered to collect sales tax in your county, along with all of the information that is on their sales tax certificate that they post in their business. So we're able to provide that to you. It'll have the address on there too, so you can kind of weed out the ones that might not be in your city that you're not concerned with. The BOTS program will do a little bit more in that it's comparing your occupancy licenses along with those sales tax certificates. And I think some of our agents, at least at the beginning of the program when they did the pilot, our agents were actually going, and after they looked over your lists, they were going out and knocking on these businesses' doors if they did not have a sales tax certificate, and trying to get them into compliance.
Yeah, and just to give a little bit more information, Dan and myself, Commissioner, and A.A.V.T. and the staff that oversee that program met 2 weeks ago to discuss certain revelations. I mean, the one thing that Jonathan just intimated to us, you can have access to that list of businesses with a state sales tax certificate is kind of new to many of us. Some folks have been getting it all along if they have requested it, but you have to request it from the right person. So that's been verified now, and so that meeting that we had at DOR was to try and set up a baseline for moving forward, because it really does change the way that change the meaning of that program. The program is set up for DOR to ensure that businesses are signed up to pay sales tax in the local areas, but because you can get that list, you can double check and make sure that businesses that are signed up with the state are actually signed up for a business license in your area. So that's the two-way street that we have always, kind of wanted to see. And lo and behold, they're all wrong, but you have to ask the right person. But rather than all everybody ask at once, probably something that would be good to get with your county folks and other cities in the county. This list will be big, and try and work together with you. We will work with DOR to come up with a system to move forward with that, because it will be a new comprehensive way that system
keep in mind that listing that we provide to you, it doesn't confirm whether or not they're actually filing their taxes, just that they've registered.
It helps out a lot because I was involved in the early stages where we would send information to you guys, and you might remember me, but I kept calling and said, I need a list because we're doing business license audit. And we have a lot of businesses that they have their sales tax certificate because they want to buy products tax-free, but they don't have a business license. There's no way for us to cross-reference and do that, so that's going to help a whole lot.
Good, great. We verify monthly also the accuracy of your sales tax distributions. Obviously, we can't verify it based on every taxpayer in the state. We kind of do a high-level check of those things. But if we see something that's kind of out of kilter, you're more than 10% down, more than 10% up, we're looking for fluctuations in those distributions and trying to pinpoint why that happened. Obviously, if it's a huge amount, we know we're going to get a call. So we want to know up front. But for our own purposes, we also want to make sure that those returns are processed correctly, especially if it's a large taxpayer, Georgia Power or Walmart. We want to make sure those are processed correctly. And usually the larger taxpayers are doing a good job of it. They've got the staff and they've got the money to invest in their accounting department, and those are done correctly. Quarterly, we publish the local sales tax rates that your businesses use to charge sales tax. We update our accounting program so that when the businesses file their returns through our Georgia Tax Center portal, the correct sales tax rate is charged. When they put in their taxable sales, our Georgia Tax Center portal calculates it for them automatically. So there's no more math problems. Yes, ma'am.
You all handle SPLOST distribution?
We do handle the SPLOST distribution.
Is there a time frame from the time it reaches your county that they have to distribute it to their cities?
Not as far as state regulations go. There may be something written into your intergovernmental agreement that may address that. It might be.
Is there anything that might say whether it could be withheld on the state level?
Whether the state would withhold it?
No, whether the county can withhold it from the level.
Not that I know of, no.
Thank you.
Okay. That would be interesting if they're withholding it. Maybe I'll give you my card afterwards. Maybe we need to have a chat. We also post a commodity sales tax distribution report quarterly on our website. What it does is it takes one of your 1% taxes. Usually it's the lost tax that we use the report for. If a county does not have a lost, then we use the educational lost or the SPLOST. But it breaks down that monthly distribution into major commodity groups. And I'll have an example of that a little bit later in the slideshow, but it's going to show you fluctuations. If there is a fluctuation, it can show you which major grouping it's coming from, whether it's manufacturing or the utilities section, accommodations. There's quite a few categories that it could happen in, and you can kind of pinpoint what's happening in your county. Ongoing, we track the effective dates of those SPLOST referendums and the money amounts. The loss doesn't have a maximum money amount when that's voted in. That goes until it's voted out by the taxpayers in the county. But in the case of SPLOST and ELOST, we're tracking those dates that it's good for, as well as the dollar amount that was related to that SPLOST or ELOST. And we also will assist you with any requests for data. My office, like Michael said, that my office is where you want to go for data for the local governments. And we'll help you as far as these categories, these taxing categories, we can help you out there. The relevant tax types, you all know most of these. Some of them you may not be familiar with if they're not implemented in your county, but the local option sales tax, the LOST, the host, MARTA, SPLOST, TSPLOST, the educational lost, and then we've got a couple of little catch-alls down there with the municipal option sales tax in the city of Atlanta, and then Muskogee and towns have a second penny lost. They're still limited with these, even with these second loss, we're still limited to there's a 2% cap on the number of local option taxes, sales taxes that you can have in the county, with the educational loss being exempt from that cap. So really, in effect, you have 3 that you can have, TSPLOST being exempt from that cap as well, allowing some counties to have a 4% local sales tax rate. This is what is posted on our website for the rate chart that the businesses use. They'll just show your county, the rate, and which tax types are in effect. And this changes, this is updated quarterly. Local sales taxes go into effect at the beginning of a quarter and they end at the end of a quarter. Taxes in Georgia, we had a discussion yesterday in Garden City a little bit on this, but taxes in Georgia are based on the point of delivery, not necessarily where the sale occurred. So if you went down to your Lowe's and bought a washing machine and had it delivered to your home in a different county than the Lowe's was located in, they would charge your home county rate for sales tax, and not necessarily where the store is located. So it's based on the delivery point in Georgia. Yes, sir.
What's the possibility of getting point of sale?
Well, since we don't have point of sale data, I could not provide it. If you're asking what's the possibility of the legislature changing that, I wouldn't even venture a guess. I'm not sure what it would take to change that, because the whole system in Georgia has been set up for years based on point of delivery. And it can be a good thing and it can be a bad thing. Obviously, it's a bad thing for you all because there's no data based on point of sales. And if you use your distribution data, you can see what taxable sales are occurring, and that includes what is being delivered into your county.
Does the DOR have the software capabilities of moving point of sale data?
We do not. Yes, ma'am.
So Columbus is kind of a hub for a lot of outlying counties. And so basically what you're saying here is with the, say, Home Depot being located in Columbus,
Mm-hmm.
Harris County is just 5 minutes away from the location of Home Depot. So if it's the new appliance is being delivered to Harris County, you're saying that person would be paying Harris County sales tax rate or
Right.
County?
Right. Wherever it's delivered, they'd be paying that sales tax rate. And then Home Depot would report that on their monthly sales tax return, that these sales occurred as Harris County sales. Now, if you carry it out of the store, if I put the washing machine in the back of my truck and carried it away, it's being charged at that location. Yes, sir.
How does the retailer determine point of delivery?
It's based on the address of the customer. And they have some nice software, I'm sure probably even nicer than what we have, that goes into the zip +4 area codes to determine which county or which location that's in.
What's the cash transaction?
They still have to have the delivery address if they're delivering it. So they would charge the sales tax rate based on that delivery address.
So this is one of those legislative things that we're not supposed to get upset with you over.
Yes.
Worth County is not going to help pay our roads that these people drive.
Right. You'd have to talk to the fellas up in Atlanta to get that changed.
Yeah, and he's gonna show us how these companies that have multi-county obligations actually submit their taxes online. But then there's also the businesses that don't make a living. So there are different types of businesses when they submit to DOR are different. And so that's where our questions I think should come from to
Yes, ma'am. That's correct.
So, and now, where the point of delivery, that's also the municipality that's receiving the tax revenue, correct?
Well, the tax rate is charged by county in Georgia, so it's going to be part of the large pot of money that's collected that month for the county, and your portion of that is based on, for the lost tax, is going to be based on that certificate of distribution, the percentage that you all have negotiated between yourself and the other cities in the county.
Right, but if the purchase is purchased in County A and delivered to County B, County B is getting the revenue from that purchase, correct?
Correct.
And so citizens who live in County B that are ordering online from all over Georgia, when their products are delivered to their home through online sales, their local county that they live in is the one who's benefiting from the revenue, correct?
Correct.
So, I'm assuming hopefully, I mean, is there any plans to do anything different with that? I mean, we might be getting upset that our local unit isn't, is in County A, but County B is getting the revenues from what's sold and delivered out there. But we're also getting a lot of revenues from other places because of online, so we get a lot of online from the newspaper. Just on that.
Right.
That's great. Y'all work this out, think about it, talk, bring up your comments, bring up your questions. I want to point out that we have talked to them people. When we talked about, we're trying to reach out to as many businesses as we can that are large, that have a sales tax obligation to the state. And Home Depot flat out says, our software system can pinpoint exactly what we do. And if the state asks us to give more detail, we'll do it. So long, because it's not going to take them any time to give them more detail. But if they don't have to, they're not going to. And that would be a process that would have to be set up, and we have to get legislation passed in order to push that along. But the capability is there to give greater detail data, but it's a matter of us getting the message that will provide information, and just in order to work.
Is this the same on a federal level? If you're online ordering from out of your state, is it still going to your local county and delivered?
From international?
State stuff, it depends on the company, I believe, because
Amazon is the only one that,
well, you talk about Amazon, but I mean, as far as the federal legislation goes, we haven't had anything to pass. If you have a location in the state law says that you should be paying state and local sales tax. But if you're not, you're in another state, our revenue department's not going to go to Utah. I don't think.
No. We do have auditors, but it's usually for a company that has a presence in Georgia. So we have auditors in California that are auditing companies that have actual presence in Georgia. There's also, just to go along with that, the Streamlined Sales Tax Initiative was started a few years ago in the department. And these businesses, these are usually larger businesses that are voluntarily submitting their sales tax to us, even though they have no presence in the state, but they're making deliveries within our state. They're submitting their sales taxes to us voluntarily. And that's part of an initiative, I think, a federal initiative that they're trying to start, but they wanted to get a jump on it. So we appreciate any sales tax we can get. And this, Michael mentioned this, how these businesses report. Got a short video that'll show you how these businesses are reporting in a multi-county situation where they're reporting for multiple counties. Let's see if I can get this to. Yes, ma'am.
If someone has a bill and they pay like 3 or 4 months sales tax, and then they send a tax it's up to them to get back through the state?
I do not know the answer to that question. Don, would you have any idea?
Yes, the person, you can send them it, the vendor collects the sales tax, and then the purchaser determines that they're exempt. Yeah, they can make a refund claim with the Department of Revenue. They'll send you an assignment of vendor's right. You just on that affidavit verify that you related the funds to the Department of Revenue and the taxpayer, the consumer that paid the sales tax, they'll do that with a refund claim.
Welcome to the Georgia Department of Revenue Georgia Tax Center instructional videos. This video will cover how to file an ST3 multi-county sales tax return. To begin, log into GTC at this address. In GTC, fields that are required must be completed before continuing. Entries that are in error display a red triangle in the upper left corner of the field. Correct these fields to continue. Enter your username and password. Remember that it is case sensitive. Click the Login button. Once logged in, click on your sales tax account number located under the My Accounts header. Click on File Return for the period you wish to file for. Click on Step 1, verify the period is correct and then choose No or Yes. If you choose No, then a $0 return will be created for you to submit. Select all that apply and then click OK. Click on Step 2 to fill in the return. For more information about a specific field, click on the question mark next to the line number. Enter your total sales and then tab. Certain fields will automatically populate with calculations. Fields that require more data will be highlighted by a triangle here. Click on the hyperlink to enter that page. Select your counties located in the drop-down box under the jurisdiction header. Choose the county and enter the amount of taxable sales. The tax rate is automatically supplied, and the amount of sales tax is calculated for you after you move to the next line. Click OK when done. We are also reporting use tax, so click the hyperlink on line 5. Choose your county or counties and then the reason code. An explanation of the reason codes can be found on the sales tax form. Line 6 has a red box by it, so you need to review that part. Appling County collects TSPLOST tax, so it has already been calculated for you, but since we had use tax for that county, you also have to report it here. Click OK when done. You can click Save and Finish later, if you do not want to submit it now. This will store your return so you can update it if needed. Click Submit to.
Okay, this just shows briefly what's happening with those businesses and how they're filing. Something that reminded me of with use tax, if they're purchasing their office equipment in Florida and they bring it here for their use in their business, they do have to pay a use tax on that, which is essentially, making up for the sales tax that they did not have to pay because essentially they didn't purchase it here. So you're making up a little bit of the money from sales that are occurring outside and then them shipping product in. This just shows our general tax collection cycle. The taxes that are collected in the month of January by the businesses have to be submitted to the department by February 20th, and we distribute those monies to you all by the last day of February, the month that we actually get it. State and local taxes are reported and paid together, and their reported distributions must equal their payment, so they're required to pay their full amount. And this is just a little more detailed example of how those taxes go. Taxes collected between January 1st and 31st are reported and remitted to the department by February 20th. the previous closeout that occurred, or your distribution in January, the day after that, we start accumulating sales taxes again for the February distribution. So in this case, January 27th, we started accumulating the next batches of sales taxes that were coming in, and we get them intermittently throughout the month, not large amounts. And then we go up through February 24th. February 24th, we closed out, got ready to send the money down to the counties and the cities. February 25th, we transmit that information to our bank to let them know how much to transmit to your local accounts. And then by February 27th, which was the last business day of February, it should have been in your account. Some of the outlying smaller banks, it may have taken a day or two longer than that, but that's generally how it goes. We close out 4 business days before the end of the month, and trying to give ourselves enough time. So we are transmitting the money to you the same month that we get it, but that's a month after the sale actually occurred. So if you're trying to judge, which month did the sales occurred, you'll know that we're a month afterwards. So if you see a huge distribution in January, you know those were December sales. We also distribute the pro rata distributions that are twice a year. Past few years they've been very small amounts, $500,000 to $1 million totally statewide within the past couple of years. But we're required at least twice a year to take anything that's unidentifiable to us. We don't know which county is supposed to get the benefit of that money, or it's a return that's come in that we can't process. We can't identify who the taxpayer was. They just sent in a blank return, except for some data on down in the return section. We'll hold on to those, and then twice a year distribute the money out based on the previous 6 months distributions that you've received compared to what we've sent out statewide. So we're trying to prorate the amount we send to you based on what you've received most recently in the past. And that's usually less than 0.5% of total payments. So if $500,000 compared to, and that's over a 6-month period, to the $400 million a month that we're sending out. Distributions, if you're comparing your county's distributions, you go online to our Georgia Tax Center and look at your distributions and are trying to compare those distributions. They will differ, even though they're all 1%. They should, in essence, be the same. You'll probably see less than a 3% per quarter change, but this is caused by the use taxes. It's also caused by compliance, either late or underpayments. Folks that are paying, they may be paying from a time period. It could have been years ago when maybe your SPLOST was not in effect. And so they're not paying the late for that SPLOST since it wasn't in effect at the time that those taxes were due, but they're paying now when you do have a SPLOST running, and so your SPLOST will look like it's been underpaid for the month. There's also refunds that are applied for occasionally. A business will have exemption, but they've paid sales tax up front, and then they're applying for a refund later. And we can research issues of unusual distributions on request, so please give my office a call. We're happy to help. We also, this is the link for the sales tax rates and the commodity data, that upper link, and the bottom link for the distribution data, where you can look up your monthly distributions. And we have data back to at least 2004 on our website. So if you want to compare your distributions, what you've received or what anyone else in the state has received, you have access to that data. And it's exportable. You can export it into a Excel spreadsheet so that you can look at it. This is the web page for our Georgia Tax Center. You'll go to this page and click on that business link. Let's see if my pen's working here. This business link, nope. But that business link there will show you, it doesn't look like a link on the first page, but it'll open up that drop-down box where you'll see that sales tax distribution link. If you'll click on that link, it'll take you to this page where you select your county, You can select a particular jurisdiction within a county, or you can leave it blank if you want to see everybody, and that includes all of the tax types, LOST, SPLOST, ELOST. And you can put in a distribution period that you want to see, a multi-year distribution period. You can pull that data all at once. And it'll look similar to this when it comes up. This is City of Baxley, and you just see they're lost right there. But this is your distribution amount here and your tax type, but these fields over to the right where it says returns, billing, audits, adjustments, and admin fee, the sum of those fields should equal your amount of distribution, and that's just telling you how much of that distribution is coming from just regular returns that are filed, how much is coming from billing, from audits that are being performed, some minor adjustments usually, and that admin fee, that's the state's 1% admin fee for administering the sales tax program. Yes, sir.
How often are audits done?
I'm not in the compliance division. I'm not sure exactly how often they do those. I know there's the larger businesses are on a schedule of 2 to 3 years, last I heard. But the smaller businesses, I'm not sure. And that's probably changed since Don was in the compliance division.
There's a 3-year statute of limitations, but once audit started, a lot of times the waivers obtained from the taxpayer or the taxpayer rep or the Department of Revenue will get a waiver to hold that 3-year period open, which, as you know, they can get bigger and bigger.
Our commodity report that we publish quarterly is, the distributions are listed by major commodity group, and we use the North American Industry Classification System. We've been using that since 2009. Prior to that, we used the SIC, or Standard Industry Code classification. So if you want data back to 2009, we do have it based on these commodity groups. And the taxpayer actually self-reports what their commodity code is. So it may not always be accurate. I think I mentioned one year we were looking at one of the big sports teams in Atlanta, and they were classified as an amusement park. Seemed a little odd, it's out of place, so we're able to correct those. But this is the major sectors that we use, and the individual codes under each of those sectors. It may or may not mean a lot to you, but you can see a little bit, like under the automotive sector, you'll have automotive dealers and other motor vehicle dealers, such as motorcycles. But we also have automotive parts, accessories, and tire stores. And a lot of times folks are trying to see in that category, what's happening with my automobile sales in the county. And we can't always give that information because in that automotive sector you have the parts stores as well. So that's gonna, and the dealerships will also include parts sales in their sales tax reports. So there's not a breakdown between, if I look at one dealer, I don't know how much is from actual automobile sales and how much is from repairs and parts. This is our commodity report. I had to cut off the right side, some of those groupings, but this is Appling County, and it breaks down that 1% tax in the county into these major groupings. And you can back into your taxable sales for each of those. I do it simple. I just move the decimal place over 2 spaces to the right. That'll give you your taxable sales. And that's updated quarterly. Our next update should be in January for the data for October, November, December. So you'll be able to see your end of year sales and what's happened. Just a little bit about each of those tax types that was on an earlier slide. The LOST, county and qualifying municipalities share this tax revenue, and it's based on the certificate of distribution that's signed by the county and cities. There's 147 counties that impose a SPLOST as of this quarter. And to become a qualifying municipality to receive a portion of those, you have to have at least 3 of those services, provide at least 3 of those services, and have a local tax, impose a local tax. And someone asked in Garden City yesterday, could those be contracted out with another municipality or the county? And yes, they can. The loss is voted until, or it's imposed until voted to cease. A renegotiation of those distribution percentages has to be done within 2 years after the annual or decennial census. So every 10 years that has to be renegotiated. The percentages can be the same as far as the department's concerned, as long as we get a new certificate of distribution with an updated date on there. But they can be renegotiated every year if you want to. If you want to change it every year, that doesn't bother us. You just send us the distribution certificate and we can start it the next January 1st. It has to always start. The new distribution starts January 1st of the next year. Food and beverages are taxable by your local taxes, not the state sales tax for like items you buy at your grocery store, but the local taxes do apply on food and beverages. A homestead option sales tax, there's 2 counties in the state that impose a host, Rockdale and DeKalb. Same kind of situation as the lost. It's imposed until it's voted to cease. But they're trying to make up for revenue that's lost due to homestead exemptions with this particular tax and for capital outlay projects. The host, if there is a host imposed in a county, you cannot have a lost. The MARTA tax is actually written in the Constitution. It was a constitutional amendment to impose a MARTA tax and to allow counties to participate. With Clayton being added this year, there are 3 counties that have a MARTA tax. Special purpose local option sales tax, primarily you're funding capital outlay projects. You might use your lost funds for operating expenses, but for SPLOST, you're using it for capital outlay projects. 152 counties imposing a SPLOST, and it can be imposed for up to 6 years. There was a change in 2004 that allowed it to go to 6 years. There's one county, I can't remember which county it is, but they usually come in with a 3-year SPLOST. I don't know if it's because they're nervous about their citizens passing that vote or not, so they always come in with 3 years. Generally it's 5 years or 6 years. And to meet that 6-year requirement, or that opportunity to have it go 6 years, you have to meet a few requirements for that. The referendums, when you pass a SPLOST, have to specify your major projects, the total amount of dollars to be collected, the amount of time it's supposed to go, some information about general obligation debt if it's being issued in conjunction with the tax. And it will cease at the maximum dollar amount. However, if there's a 6-year levy and you have an intergovernmental agreement or a Capital One project associated with it, it will go for the full length of time with no regard to the money amount, even if it was written in the ballot that we have. You know, we're trying to collect $15 million. You might collect that $15 million at 4 years. It's going to run another 2 years. And you'll just use those extra funds for the same purposes that the SPLOST indicated in the referendum. Something I try to stress to the counties is to vote on these taxes that expire at least more than 80 days before they expire. Written into the code is a stipulation that if it's not voted on more than 80 days before the next quarter starts, you're going to miss a whole quarter of collections. So you want to vote on it plenty early so that we don't run into that situation. The commissioner can waive that part of the regulation, but we don't like to even get into it. We just want to make sure that we've got it set up and running, and we don't run into any problems with it ending. There are only 3 or 4 times a year that you can vote on a SPLOST now. Again, a change back to 2004 that limited the number of times that the county can call for that vote. So it's in their best interest and your best interest maybe to remind them, hey, we've got a SPLOST ending, we need to vote on this. There is also, if the SPLOST were to fail, there's a 1-year time period that you have to wait before you can hold another vote on it. So if you will vote 3 years before the SPLOST ends and it fails, you've still got 2 years to hold another vote and pass it, hopefully. County, we talked about the intergovernmental agreement where the county and the cities can share the proceeds. This will generally list projects in those. The auditing, all tax proceeds must be accounted for by the county and the cities for these special projects. The funds cannot be commingled with any other funds of the county or the city, so they have to be held separate. The interest earned on the revenues have to be expended in the same manner as the tax proceeds would be. And you have to report the progress of those projects annually in the local newspaper. And the Department of Revenue does not audit for those, but the State Department of Audits actually, I believe, does the auditing on any of those if there's any questions about the use of the funds. The TSPLOST that was implemented in 2013, this allows the regions to impose a SPLOST. Yes, ma'am.
The commingling of private dollars and SPLOST dollars.
Mm-hmm.
What's the limitations on it?
I would have to ask an auditor about that. I know that the funds have to be held in a separate account from any other funds and accounted for separately. So you couldn't, I don't even want to say that private dollars could be used. If they are, they can't be accounted for in the same manner that the SPLOST funds are.
So if you're working on a project and you've got someone with private dollars and we have our SPLOST dollars, then how do we mesh those two together to bring that project to fruition?
You know, I'm gonna say talk to the city attorney. that starts to get into some legal questions that I'm not, you know.
I have a little issue with that. The commingling is mainly for other funds. We got a private, we had somebody that had private funds, and we had to just have an ordinance for a project or whatever, but that's not considered commingling funds per se. It's just private dollars and the SPLOST fund dollars. As long as you're not giving the SPLOST dollars to private individuals, do whatever. If you're mixing the general fund with the SPLOST fund, that's cool.
Exactly. Good point.
We're getting so many different answers to that scenario that we still kind of stretching our head to make sure that we're in compliance with not mixing those funds, because we were told that was commingling. So I would like to have a fine definitive for that potential.
Right. The Revenue Department doesn't really get into that aspect of it. I think if the city attorney couldn't answer that question, the Department of Audits could probably answer that. The State Department of Audits.
Yeah, and we have a SPLOST manual online that you can get off the GMA website. And if we're able to answer the question, we can call it off us. Okay. Either the legal team or myself, we'll look into it. If there's still questions, it certainly would be a question for your return. Okay. So a lot of times, because what you're dealing with when you go into a project and the city decides that this needs to be done, that's a question of politics. So you have to deal with the law in regards to the decision. And so that's what the attorney
The TSPLOST, this just allowed the counties to, in the regions in the state, to impose a TSPLOST, a 1% sales tax for transportation purposes. There are 46 counties that are participating in that in 3 regions that actually passed that. It's a 10-year SPLOST, or 10-year TSPLOST, 10-year sales tax that can be, voted on again after that 10-year period. The distribution doesn't actually go directly to the counties or the cities. It goes to the Georgia State Financing and Investment Commission. From there, they determine, along with the Department of Transportation, what money goes back down to the local governments for whatever projects are being worked on. And I don't know, once it gets out of our hands, I'm not sure exactly how that occurs and what process they go through to do that. Anytime you get more than one agency involved, it can be a little,
But the distribution query to tell you how much is coming back to your county in TSPLOST dollars, so you have something to back yourself up when you're trying to find out where the TSPLOST dollars are going. You can find out how much is coming in.
Mm-hmm. So you'll see on that Georgia Tax Center portal that I showed you earlier, where you can look up your distributions, you can see those TSPLOST distributions that were taxable for your county. Out of sales tax and into prepaid wireless fees, and this was implemented in 2012 was our first distribution, and this basically changed hands from one department to the Department of Revenue from another department to collect these prepaid fees. There are 156 counties and 22 cities that receive this distribution, and it provides for fees that are collected on prepaid wireless cards, and I think also prepaid phone service. It's different from the 911 fee that you will see on your home phone bill. I thought I saw a hand. The distribution is based on your population, and you also have to be approved to be on the program, so you have to be operating in I have to look at my slide, public safety answering point, a 911 service, to actually participate in the program. And then we use the U.S. Census population data to determine how much of the overall amount compared to the overall state population that you all will get. Yes, ma'am.
So the taxes on, say, landline and the taxes on wireless go to?
The landline does not come to the Department of Revenue. I'm not sure exactly who gets that. I think it's local. I believe it's reported locally.
But the sale go to the county, not or where does it go?
When we distribute this prepaid wireless fee, it's going down to either the county or the city that's operating the 911 service, or it may go directly to, depending on the bank account that we've been provided to transfer the money to, it may go directly into the 911 service, a bank account. Yes, sir. Did you have a question?
Go back to TSPLOST real quick.
Yeah.
Those dollars allocated based on the collection of already allocated based on approved projects.
They are based on the projects, I understand, and not necessarily the collections that were brought in. Region-wide, I think it may have some play on what money is used, but not necessarily county. It's possible, depending on if there's a project in that county or not.
Yeah, because of the district basis that it was taxable, within several cities and counties complaining because they didn't go to the rest of the district for any given amount of time. And it's a matter of where the projects are on the list. But yeah, it could take a while to feel what's going on in your area. Yeah, and we are working with the all the local government districts that all come up with the list. Yeah,
Mentioned that the district, if you want to participate in the program, you have to operate a public safety answering point. You have to impose by ordinance or resolution a prepaid wireless charge of 75 cents per transaction, and pass that and file a copy with our Office of Legal Affairs and Tax Policy. And once that's done and they've approved it and they've verified with the GMA folks that yes, there is a 911 service being operated, then they'll contact my office and let me know to add you all to the distribution.
Can you get a copy of that ordinance from the Department of Revenue, Office of Legal Affairs?
I believe they do have a kind of a blank copy that you can use for that. I haven't seen it since 2012, but 2012 I remember seeing a kind of an example of the ordinance. The returns for those fees are filed through the Georgia Tax Center portal, just like the sales tax is, and it's audited, assessed, and collected the same manner as sales tax. And we distribute those annually by October 15th. We have to distribute them by October 15th by law. And we do have those reports going back to 2012, each year's distribution on there. So if you want to go back and look at yours or any other jurisdiction's distribution amount, you can go back and see that, as well as what the state kept. The Forest Land Assistance Grants. This was a grant to offset revenue loss from forest land conservation use property. Or valuation on the digest. And this kind of gets into property tax as well as distribution. But it's a distribution that happens annually. The money has to be appropriated by the legislature. And we pay out about $30 million to the local governments. We usually distribute based on the order that the application for the grant is filed with us. And we get the monies from the Office of Planning and Budget, kind of in allotments and smaller allotments than that entire amount. So throughout the year, I haven't determined a time period yet because it doesn't seem to happen quarterly. It just kind of happens at random. They'll say, hey, you have $3 million to pay out forest land grants. Send us the request over of who to pay, and then we'll send those out. So you might have a neighboring county or a neighboring city that gets funds before or after you get yours. The application for those funds are made with the county digest when it's filed each year. And payments begin after July 1st for the current fiscal year. As I mentioned, the funds are allotted to us in small payments, small installments. An example of the distribution timeline, this gets to be kind of confusing because there's so many dates that are involved in different years, fiscal year, tax digest years, and basically, your tax digest year for 2015 digest submission is submitted sometime between July and December, hopefully before December, hopefully a few months before December, but generally between July and December of 2015. So this year, the applications are being made for funds that we're going to pay out after July 1st, 2016. So we have a 2015 tax digest. The legislatures will appropriate our funds early in 2016 for the upcoming fiscal year 2017. And we'll start paying that out after July 1st, 2016. The alternative ad valorem tax. This is a tax on commercial trucks that are registered under the International Registration Plan. The distribution happens based kind of two ways at the moment for a few more years. It's based on a benchmark amount that was started in 2013. They took the benchmark of what ad valorem was being collected by you all in 2013, but they also use a vehicle ratio formula comparing the number of vehicles, these commercial vehicles that are registered in your county to the number that's registered statewide. We're distributing about $15 million per year. And Senate Bill 82 amended that code section that allowed for this alternative ad valorem tax proceeds. Our 2014 collections, $15 million. Of course, the state has a 1% admin fee to collect and disperse the monies. First distribution was August 1st of this year. From here on out, though, that disbursement will happen April 1st. The benchmark in 2013 was $9.1 million for IRP vehicles, and then that'll be generally phased out. This is tried to keep the counties whole on the amount of ad valorem they received during that 2013 time period. But you see it phases out over 5 years. So by 2020, there will be no benchmark distribution, and the distribution will only be primarily on the ratio of IRP vehicles in your county compared to what's registered in the state. The remaining funds, $6.6 million in this particular example, would be distributed based on this ratio. And as that benchmark phases out, it'll completely go over to this vehicle ratio formula. So anything after that 9.1 million on the benchmark then goes here. And this is the letter that we send out. In this case, we send out a check. This letter goes to the counties along with the check for that, and there's some information from your tax digest, from the county's tax digest, that indicates how much money should be going to each of these particular jurisdictions. If you do not impose a property tax, you would not get a portion of the alternative ad valorem tax. But if you do, then it would be in your interest to take a look at this and make sure the county's sending you what we're saying you should get approximately. Any questions? If not, I'll be here the rest of the day, so if you think of one, please come and see me. Thank you.